All right. Well, here we go for another weekly recap. This is Trader Travis. I have my Success Academy co-trainer Peter, my partner in crime here, or not really crime. We're doing positive things here. So helping people achieve financial independence and build wealth. I'm going to let Peter go first today. I'll be turn off my camera, be behind the scenes adding up my trades so I can kind of give you a recap of all the trades you've watched me place in the previous weekly recaps. If you have not watched those, I highly encourage you to go back and watch those because we place trades live and gave you an update on our weekly income we are earning. So with that being said, let me turn it over to Peter, and I will be right back in a second after Peter finishes going through his trades.
Okay, thanks, Travis. So let me share, make sure you guys can see my Excel spreadsheet. Okay, so first of all, Travis doesn't know I'm going to do this, but I'm going to do it. Real quick, I just wanted to say to you guys, these weekly recaps, I know a lot of you guys enjoy them, but you need to understand that this is like phenomenal for me. I am so blessed that Travis has given me these opportunities because I was in the same position a lot of you guys are in. If you're a newer student, or even if you've been doing it for a while, and you're struggling or you're wondering, hey, is this ever going to work? I was right where you were at. So Travis was someone that you guys have all heard my story, and a lot of you guys have known that I've been doing this for a while, and I started with Travis a long time ago, and he was always the person that I latched onto as my mentor, and I pretty much asked him to be my mentor, which is not an easy thing for someone to accept because it's a lot of work. And so Travis, lucky for me, Travis said, yeah, I'll be your mentor. And I wasn't the easiest person to teach, but he's given me so many opportunities, and this is like it's like hitting the top of Mount Everest for me. That's what I equate it to. This was my goal, was to become successful at trading options and to have a mentor that takes me under his wing. And not only that, I get to share my story with you guys, but I also get to be with Travis on a weekly basis doing this stuff. So I just wanted to start out with that. And I'm going to roll right into this week's revenue. You guys can see, if you guys have been following me and following me and Travis on these weekly recaps, you can see my revenue. Hey, it's gone up. It's still kind of the weekly revenue is still kind of the same because I base that off my average. I don't base that off my current, right? So this week's revenue is 1660, and I'll show you why it's like that. So a couple of my trades. So let's start off. I'm going to start off with AT&T. Where is my AT&T? It's here somewhere. Okay, so I had AT&T. I bought it a long time ago, or I was assigned AT&T a long time ago at 32.50. I've been selling covered calls on AT&T at 32, 32.50, and you can kind of see all this revenue that I generated. I generated 660, 682 on covered calls, and then you can see I sold this covered call at $32. I turned around and I was assigned at $32, but did I lose out? No, I didn't, because of all the revenue I generated. So I ended up getting assigned. I sold my AT&T at $32. I didn't lose any money because of all the revenue I generated between that. So I turned right back around. I sold 22 contracts at $32.50, and there's a nice little, that's a weekly revenue of $11.44. Again, you guys have been following this, so you know how it works. If I am assigned, no biggie. QQQ, I was assigned. All of you guys that are watching this stuff and are following the market, you know QQQ went down. So I was assigned at 185. QQQ, I think, it closed out on Friday around 181, so really low. But I turned around and I just decided, you know what, I'm going to sell 3 contracts at 185.50. If QQQ makes this miraculous recovery in a week, I make $50 per 100 shares, or I'm sorry, 50 cents per 100 shares. So I'll take the $75. It doesn't seem like a lot, but I'll take it. And then I was assigned again at with Macy's. I sold a covered call on Macy's. I own 500 shares. I sold a covered call expecting to be assigned because I sold it in the money. And I wasn't assigned. It ended up dropping even more. And my cash secured put I had for that week got assigned. So now I own 1,000 shares of Macy's. So I turned around and I sold 10 covered calls at 35.50. That's right around my break-even point as far as share prices. So if I'm assigned on this, it will be break-even. I won't lose any money. And I generated $450 in revenue on Macy's. Now I want to cover NVDA. NVDA I was assigned because it did drop. If you guys have been watching NVDA did drop, and I was assigned. I tried to sell a covered call at the price point I was assigned, $277.50. It wouldn't let me because it's an IRA account and it doesn't allow you to do that. It's considered an illegal trade until you own the share. So I'll go ahead and do that on Monday. $277.50 is what I paid for it. I'll sell a covered call at $277.50. It'll generate me another, I think, $230 in revenue. Real quick, I'm a little bit over my time by 23 seconds. I wanted to cover my small trading account. The numbers are going to change a little bit more here because I'm going to be depositing a large sum of cash into this account, but I'm still going to base everything off that 5,000 because that was my goal, to show you guys how you can use a $5,000 account and still make good money. But on Macy's, I talked about this. I touched on it last week. I sold a 36.50 call option, or covered call, sorry. I'm managing this one. I'm not going to allow it to assign me because that would be a loss for me. You can see I put down in the bottom here 36.50. That's worst case scenario. Worst case scenario, if I fell asleep or I wasn't able to manage this trade and I was assigned, I still am up 650. I've deposited 500, so I'm still up 150. So that's pretty good. But I want to take this and change this really quickly because I'm going to manage this and show you guys. If I maintain selling Macy's at $39 a share, you'll see that this small account is up $900. So that takes it to a 14.5% return on my investment. But right now I want to just keep it at where I'm at because this is worst case scenario, and that's still a 9.5% investment to include my deposits. So that's where I'm at. I'm more in line with my goals that I wanted. I generated really good revenue this week. That took into account any losses I had from last week when I got certain assignments and things I did. So just to show you though that this stuff works, you can see my total revenue is at $11,743 over 79 days, which is just about 11 weeks. 2 minutes over, sorry, Travis.
Oh, you're good to go. Yeah, considering I've went over like 3 weeks in a row.
Yeah, but you're the host, so you're allowed to.
Co-host.
I know. All right. You're the man, so you're allowed to.
Yeah. Don't tell my wife that. So I have to deflate my ego. So let me go ahead and take over the screen real quick. My recap will not be detailed today. What I'm going to do, I'll apologize, I'm a bit not prepared. I have a different background. I was explaining to Peter. Peter was like, "Where is that at?" I was like, "Oh, this is it was supposed to be our second home we built near my family, but we're actually in the process of selling it. So if anybody wants a house in Ashland, Virginia, right beside Randolph-Macon College, hey, I am selling it. It's yours." But anyway, what I want to do is just walk you through. I don't have an Excel, so I want to walk you through the numbers here. I am modeling a $100,000 account, and my numbers here, I have total revenue I've brought in for the month is about $26,721. That breaks down into weekly income of $6,680. But the way I trade is I front load my trades or profits. It's like the Buffett strategy. We receive a bunch of income up front. It doesn't necessarily mean I'll keep all of that income. And so, I've received all of my income up front. The strategy I use, it's instant profit. You click buttons, that money shows up immediately in my account. So that 26 grand is in my account. Some of it I may have to give back if the trade doesn't play out. But when it's ending and it's all said and done, I will average everything out for the month and let you know where I stand. But so far, best case scenario, I'll end up with about $6,680 for the week. Again, that's life changing. What would you be able to do with that if you were able to earn that each week? And it's not that difficult. Again, this is just a small 100 grand model account. So, a lot of people stress over retirement. They think they need $1 million to even come close to making this. I'm like, no, options are so leveraged. You really don't need a lot. You just need the skill set. You need someone to teach you how to do it without blowing your account and losing all your money. And we are very, very conservative investors. And so anyway, I promised a Success Academy member, Sherry, that I would share how I calculate returns. Before I do that, let me just give you a quick point out the general market real quick. The general market has had some trouble in the past few days. Don't get caught up on CNBC. I haven't looked at CNBC maybe in 3 years. I don't look at the news. We don't have cable TV. I have no clue what's going on in the world half of the time. I'm still able to profit. So don't fall victim to that limiting belief that you need to know what's going on. You need to understand why the stock market is down. No, you don't. You just need to trade what you see. So I see the market having trouble the last few days. So the last few days, I really haven't placed any trades. I'm just sitting tight. Again, I trade what I see. When I see the market bounce off maybe support here, which will be the 30-day moving average kind of acting as support, that's when I may start placing some trades. It just looks like normal price movement right now. It doesn't look like anything to be concerned about, but that's what I'm waiting on. When that happens, I will place more trades. That's kind of how I trade. Like the 26 grand I just talked about, I didn't place those recently. I placed those about a week ago when the market was coming out of a resting period, and it's what I call an ideal entry point. You know what? I forgot to hit my timer. It's called an ideal entry point. Is where the market is coming out of a correction or coming out of a resting period, and it's a ideal time to start trading, a lower risk entry point. So I place a bunch of trades in and I just sit back and I just wait. I wait it out, wait for the trade to play out. And I try not to, that's kind of how I look at the market. I test it out. When it's risky, I stand back. When it looks like it's a great time, like Warren Buffett, when everything's cheap and on sale, that's when I buy and that's when I get in. All right. So now let me go ahead and show my old spreadsheet here from 2013. And I wanted to talk about, this is the year that, give me one sec, everybody. Okay, sorry about that. Family, kids are running around in the background playing music all loud or TV. So sorry. All right, now. All right.
I could tell you were counseling someone.
Yeah, exactly. Yeah, I had to mute that out. Unscripted, Trader Travis, unscripted. All right, so
it was awesome.
Anyway, all right, 48 grand. All right. So this account started with 48 grand. It had a 64% return in 1 year, right? So, but it was several strategies I placed in this account, right? It's a multi-strategy account. So this student was asking a question about, well, I'm trading cover calls, I'm selling cash security puts. Is so much going on. I have no clue how to calculate my return on investment. So there are two ways I do it. Okay, there is a based on the total account value. And the second way is based on the strategy. So let's do for total account value first. Okay, so I'll look at USO here, and if you look at USO back in 2013, it went absolutely nowhere in price. Yet using options, I was able to earn $6,800 off of the stock that went nowhere. Buy and hold investors made nothing. Because I use options, I made $6,807 off the stock, which equated to about a 16% return on the money I had invested. So that's per strategy. And the way I did it is I just added up. Yeah, I had a lot of strategies, cash security puts, cover calls. I was in and out, different things like that. But I added up the total income I made just on that one stock. It was $6,000. Then I divided that by how much money I had, the most I had tied up in that stock at one time, which was $41,400. So if you take that, the profit, and divide it by the total amount I had invested, that's where I get the 16% return on that cash that was allocated to that specific strategy. Now, if I want to know, well, how much did cover calls contribute to my overall return for the year? Because again, I had a 60% return on the overall account. If I just want to know how much of that 60% was covered calls, then again, I take this 68,000 right here, 6,800, 6,807. Then I divide it by the beginning balance of 48,000. And I think it's about 14%. So that lets me know, how much of that cover call profit was, for the entire account balance. I hope that made sense. So what portion of that 60% was just cover call? The rest came from the other strategies, which was like strangles, straight calls, put spreads, things like that. And with those strategies, I might risk 1 to 2% of my account. The rest of it just sits in cash. Usually it sits in cash, but it was stressing students out this year. They're like, oh, you have all that cash sitting there doing nothing. What could you do with it? And I was like, well, if you're more aggressive, you can put that cash to work with, cover calls or owning stocks. And that's where I was showing them USO, how you can make money off a stock that goes nowhere and price is pretty predictable. So I started my timer late, but it's looking at 4 minutes. So I just wanted to show that. Sherry, if that still didn't make sense, let us know and just ask inside the members area, and I'll try to do a specific video to clear this up. So with that being said, I think I am done here, Peter, and you have something to say. You look like you're about to say something.
Yeah, I just wanted to just kind of reiterate the point that you've always driven home to me, and that is, you talked about, and I know a lot of students say, oh, you have so much cash just sitting there doing nothing, but you have always, I want to reiterate the point, cash is a position. You're not the only one to say that. Warren Buffett says it. A lot of people say it. A lot of smart investors say it. Number one. Number two, something that Travis taught me, and it really hit home, I think the beginning of this, it was like the beginning of this trading season when we started. If a lot of you guys that follow this, I always did a lot of vertical credit spreads out of the money because they're more, the probability of keeping your money is a little bit better, but it's what Travis calls a higher risk. And the reason he calls it a higher risk is because you're risking more money to make less, and that's what's happening. So when it goes against you, it sucks. And that's what happened to me at the beginning of this year. All the gains I had from last year were wiped out with one trade. So my whole point behind all that, and I know I spewed on and I apologize, but my whole point behind all that is when someone looks at the cash and says, yeah, but you're not doing anything. Think about this. Risk is your number one thing you have to look at whenever you do anything, whether it's investing in the stock market, whether it's going to buy a car, whether it's going to buy a house, whether it's going to invest in real estate, whatever you're going to do, you have to look at risk as your number one issue. And as long as you can live with the risk you're going to take, it's no different than crossing the street. If I cross the street without looking left or right and just follow that thing that says walk, then my risk is that the person driving the car is following the traffic light, right? This is the same thing. So even though you may have $100,000 sitting in your trading account, understand that if you decide, oh, I'm going to put $70,000 of that into the market and trade options and make $50,000 a week over Travis's 26, just understand you just risked 70% of your account. That's what it is. And I just wanted to make that point. Sorry. I know it was long, but it's something that's resonated with me, and it took me a while to really learn that. So I want people to learn from our wisdom, not from theirs, because when you learn from our wisdom, it's cheaper.
Yes, it is. You know what? That's a good point to wrap it up. I have nothing else to say. I don't want to ruin that point. Rewind that. Let it sink in, everybody. And with that, we will bid you farewell. We will see you on our next weekly recap.
See you guys.
All right.